Hi, I'm ReAnn Gonzalez with Edge Home Finance. Before we get started, I have a huge favor to ask. Please hit the like and subscribe button below. Okay, so now let's get into it. Buying a second home as a vacation getaway can be a wise financial move if you plan to use it several times a year. Let's chat about several things to know about buying a second home, including the requirements, costs, and process for getting another mortgage. Your first home could help you fund your second home. If you have a large amount of equity in your primary residence, you could obtain enough money to pay for most, if not all, of the cost of a second home by obtaining a cash-out refinance on your current principal residence and pay cash for the second home or a large down payment. By doing this, your interest rate and terms will be lower. If you want to pay cash for the second home, a combination of refinancing funds plus savings, a personal loan, or a 401k could provide you all you need. However, if that's not enough, a second mortgage is likely the best option. Before you can classify a vacation home as a second home for mortgage purposes, you have to meet certain lender requirements. Number 1, you must live in the home at least part of the year and keep it for personal use and enjoyment at least half of the year. Number 2, the home can function as a second home and is only one unit. Number 3, you can provide short-term rentals, but the home cannot be under the control of a property management company. Number 4, it can't be located too close to your primary residence. Rule of thumb is that vacation home needs to be 2 hours or more from your primary residence. So, for example, if you own a home in El Paso, then a vacation or second home would be Plowcroft or Ruidoso, but not Las Cruces. The loan will be a conventional loan, as you won't be able to get a VA or FHA loan, as those government-backed loan products are available only for primary residences. Underwriting is tougher. Since you already have one mortgage, expect the underwriting process to be even tougher when you're trying to get a second mortgage. Lenders may ask for larger down payments and charge higher interest rates. Now let's chat at how underwriting is different for a second mortgage. First, the credit score. We will examine your credit score to make sure it meets minimum Fannie Mae and Freddie Mac guidelines, which is currently 620 for second homes. Debt to income ratio. A typical requirement for borrowers seeking a mortgage is to have a maximum debt to income level of about 43%. However, it's much tougher to meet that standard if you already have a primary home mortgage and other debts. Higher down payment. Down payments on conventional loans for primary residence can be as low as 3%, but on a second home, Fannie and Freddie require 10% down payment. There are many added costs. You might be picturing warm sunsets on the beach when you're ready to purchase a second home. However, you should factor in these costs before your dreams materialize. Insurance. In addition to paying more for home insurance due to the location of your house, think flood zones and areas with high wildfire risk, the cost may also be higher if you're only there part-time. Furnishings. You'll need to fill the home with essential furniture and appliances if they didn't come as part of the home purchase. Plus, you may need to invest in decorations, bedroom and bathroom fixtures, and everyday items for the kitchen. Maintenance. All homes need maintenance of some sort, including lawn care, snow removal, and roof, driveway, and patio deck repair and replacement. Consider these items when evaluating your expected startup costs, the monthly budget, and long-term expense planning. Utilities. Electricity, water, and other utilities are a constant monthly cost. Taxes. Even if your mortgage payment is relatively small, remember that taxes will also increase costs. And don't forget to check on tax policies and rates if you're buying in a different state. You'll need to conduct research and get advice. There are many factors that could make the difference between a second home being a solid investment or a financial disaster. Here are some questions to ask yourself, your family, and advisors like financial and tax experts. 1. Will you use the home enough to make it worth the purchase? 2. Is it less expensive to stay at a nearby hotel or rental home rather than buying a home for your vacations? 3. If your employer is going to allow remote working, do you really need a second home for business purposes? 4. Is your income level enough to support 2 mortgages for another 5, 10, 20 years or more? 5. Can you handle the second mortgage payments along with other major expenses or debt such as college education, auto purchases, or major home repairs that may arise? 6. What are the startup costs for the new home, such as furnishings and upgrades, as well as the ongoing costs including maintenance, major repairs, and travel to and from the house? 7. Are there any tax breaks you can get from owning a second home? Evaluating your finances, creating a budget, and talking to those most important to the transaction, namely your family, can go a long way in preparing to purchase a second home. I hope you found this information helpful. If you know of anyone who needs help with a mortgage, please share my YouTube channel with them, as my goal is to help as many people as I can achieve the American dream of homeownership. Lastly, if you have any questions and want to chat about your situation, please feel free to reach out to me at 915-478-1157 or apply at my link listed below. Thanks and have a great day. Bye.